Welcome. In this video, Xcn coin price is very stuck. Is it about to explode? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. One of the most notable technical formations on the chart is this strong and stable ascending trend line. Such trend lines indicate that buyers in the market are gradually gaining strength and that the price is moving upward in a healthy manner. The fact that the price is currently positioned above this uptrend is technically very positive. This trend line not only helps investors find direction psychologically, but also represents a critical area where the price finds support and buyers are concentrated. Therefore, the price staying above this trend line is quite important for the continuation of the upward movement. Ascending trends typically indicate that a bullish sentiment persists in the market and that buyers have not lost control. In this context, the price action remaining above this trend line suggests that the sense of confidence in the market is being maintained. A reaction from the price at this level, as seen in the past, could once again signal a strong upward move. These types of trend lines not only serve as support, but also provide important insights to investors regarding the direction of the price. As of now, the price is moving very close to this trend line, which increases the potential for it to initiate another upward move from this support level. The reactions given by the price at such technical levels also reflect the general sentiment of the market. If the price once again bounces strongly upward from this trend line, it will boost investor confidence and likely lead to renewed buying pressure. Reactions from trend lines play a critical role in determining the price direction, especially in the short to medium term. Each touch of the ascending trend can create a potential rebound opportunity, which may trigger movement toward the next resistance levels. In technical analysis, trend lines that have repeatedly held in the past and caused the price to reverse several times gain more reliability. The current ascending trend line has also been tested multiple times and has proven itself by generating upward reactions each time. Therefore, the price approaching this trend line again could technically present a buying opportunity for investors. If the price finds support here once more, this could signal not only a short-term, but also a medium-term upward move. At this point, one of the most important things investors should pay attention to is the determination shown by the price at this support line. The price may consolidate sideways here or give small reactions, but as long as the trend line is not broken, these movements indicate that the upward potential remains strong. Especially in such healthy uptrends, even if the market undergoes corrections, these often extend only to the trend line, after which the upward movement resumes. This is a clear sign that the market continues on its path in a strong and dynamic way. Ascending trends also symbolize a shift in investor psychology toward optimism. That is, buyers now believe that the price will bounce back from certain levels and prefer to take positions at those points. This indicates a supply-demand imbalance in favor of buyers and shows that there is upward pressure in the market. The price remaining above this ascending trend line also suggests that large investors see these levels as support and are trading within these areas. As long as price stays above such technical structures, aiming for higher levels becomes a natural outcome. But we can't make decisions based on trends alone. Let's now take a look at other metrics as well. Stay tuned. One of the most notable and technically significant patterns on the chart is the descending wedge formation that is currently emerging. These types of formations are powerful technical structures that often indicate the potential for the price to gather strength and break upward after a period of temporary consolidation during a downtrend. A descending wedge symbolizes weakening selling pressure in the market and growing confidence among buyers. As the price moves within this pattern, it typically oscillates within a narrowing range, eventually building the potential for an upward breakout. At the moment, there is a gradual approach toward the upper boundary of the wedge, which can be seen as a promising technical sign. Patterns like this usually indicate that buyers are beginning to take positions again during downtrends, while sellers are no longer as dominant. In other words, a reversal signal is forming in the market. The descending wedge is also considered a bullish reversal pattern, and when the price breaks through the upper line of the wedge, it often marks the initial spark of an uptrend. The narrowing price action within the wedge signals decreasing volatility, suggesting that a major move could be imminent. This contraction phase is a critical stage where the potential energy built up among investors is poised to be released. Once the price reaches the upper boundary of this formation and breaks through it with strength, an upward momentum typically follows. This sets the stage for the beginning of a new bullish trend. Descending wedge formations also help gauge market sentiment from a psychological standpoint. Even though each new low within the pattern may be lower than the last, the declines tend to be weaker and slower. This indicates that sellers are losing strength, while buyers are becoming bolder at lower levels. Once the upper boundary of the formation is broken, this growing confidence can quickly translate into a strong upward wave, demonstrating the determination of buyers to push the price higher. Currently, the price continuing to move within this formation and approaching the upper band suggests that the market is preparing for a strong upward move. A breakout above this upper line with significant volume could quickly lead the price to higher levels. From a technical analysis perspective, this scenario can be interpreted as a strong buy signal. Additionally, such a breakout may boost investor confidence and encourage more participants to enter the market. As seen in previous similar chart patterns, prices breaking upward from descending wedges often enter a rapid and powerful rally afterward. This highlights both the reliability of such formations and the determination of buyers. Following the breakout, initial resistance levels can be easily surpassed, and with growing momentum, the price may aim for much higher targets. Furthermore, descending wedge formations typically appear at the end of downtrends or during correction phases, and are therefore viewed as reversal patterns. In this context, a breakout to the upside signals the end of the downtrend and the start of a new bullish move from a technical standpoint. This scenario also helps restore investor confidence, renew market interest, and increase volume, creating a highly favorable foundation for the price to move toward new highs. One of the most notable and technically positive developments on the chart right now is the fresh crossover occurring in the lower region of the MACD indicator. These types of crossovers are considered highly valuable, especially in terms of the market's potential to reverse direction. This is because the MACD is a key oscillator that measures momentum and indicates whether a trend is gaining strength. In this context, a positive crossover of the MACD lines in the lower region below the zero level technically signals the beginning of a potential reversal process and suggests that the market may be preparing for an upward move. The current positive crossover could be a sign that prices are beginning to recover after a period of decline. When the MACD line and the signal line converge and cross upward below the zero line, it indicates that momentum is starting to shift away from the downtrend and that buyers are regaining strength. This often suggests that a bottom may have formed and that stronger buying activity could be entering the market. In technical analysis, such crossovers are generally interpreted as positive signals and can serve as strong leading indicators for the start of a bullish movement. More importantly, the fact that this crossover has occurred below the zero level implies that the MACD line may soon break above the zero line in the coming days. This represents a very strong signal of reversal, both technically and psychologically. When the MACD crosses above zero, it confirms that an uptrend is underway. In such cases, not only minor upward reactions, but also larger and more sustained bullish movements can be expected. This crossover needs to move higher. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.